On the previous page, to calculate a dividend yield, we realized we could use the formula I equals PRT, where we said I is the dividend, P here is the stock price, R here is the yield, and the time T is 1 for an annual dividend. So this was the formula that we said we could use on the previous page as a simple interest formula. So knowing this, let's look at the next two problems. It says a stock pays an annual dividend of $1.75 per share. If the stock is trading at $70, find the dividend yield. Again, it's an annual dividend, so we know time is 1. This $1.75 per share, that's our dividend, so that's going to be the I value in the formula, I equals PRT. Trading at $70, that's the price, so that's going to be P. So we're going to use the formula I equals PRT. Plugging in for I, we have $1.75. For P, we have $70. R, we don't know what it is. T, we have a 1. I'm going to go ahead and divide both sides by 70 to isolate R. And I end up with R equals 1.75 divided by 70. Putting that into my calculator, I'm getting 0.025. But remember, this is the decimal version. We want a yield or a percentage. So we got to convert that to a percentage. Converting that to a percentage, we would have 2.5%. So if you're selling it for $70 or it's trading at $70 a share and you're getting an annual dividend of $1.75 per share, you are getting essentially a 2.5% interest rate, which is called your dividend yield. Let's go ahead and try example 4. It says a stock pays an annual dividend of 82 cents per share. The stock is trading at $51.25. Find the dividend yield. Again, dividend yield is the one that tells me I need to use the formula I equals PRT. When I look at this, the dividend is my I value. The trading value is my P value, and because it's an annual, I know that T equals 1. Plugging these numbers in, I would have 0.82 for 82 cents equals $51.25 times R times 1 for T. To solve for R, I'm going to divide both sides by 51.25. So I'm getting R is 0.82. divided by 51.25. Put that into your calculator. I'm getting 0.016. That's the decimal version. We do have to write our answer as a percentage. So converting that to a percentage, I'm getting 1.6%. So the interest rate you would get on this investment would be a 1.6% investment. Now remember though, that's just the yield. The stock value could have actually changed, so you might have gotten not only the 1.6% as a dividend yield, that's your rate, but the value of the stock might have actually increased, so you might have actually earned more money than that. Okay, so back in, well, not too long ago, but when we actually had newspapers, there used to be a business section in the newspaper, and in the back of the business section of the newspaper, you had all the stocks and all this information on them. You can still find these when you go and you do research on a stock. You can find out what each one of these things mean, and you could still see these charts. So let's kind of work through all of these. Okay, so it says the market value of a share is the price for which a stockholder is willing to sell a share of the stock and a buyer is willing to purchase it. Shares are always sold to the highest bidder. A brokerage firm is a dealer of stocks and acts as your agent when you want to buy or sell shares of stocks. The brokers in the firm charge a commission for their services. Most trading of stocks happens on the stock exchange. Stock exchanges are businesses whose purpose is to bring together buyers and sellers of the stock. The largest stock exchange in the United States is the New York Stock Exchange. Shares of stock are also bought and sold through the National Association of Securities Dealers Automated Quotation, which is the NASDAQ. Okay, so essentially we have the stock exchange and the NASDAQ. You can't just go and buy and sell stocks yourself. You have to go through a broker, someone who's certified to do it. Okay, so it says every working day, each stock exchange provides financial institutions, internet website hosts, newspapers, and other publications with the data of trading activity of the stocks traded on the day. So let's work through these. First thing you have is the name of the actual company. So that's what the first column is. But when they trade it, they trade by the symbol of it. They don't trade by the name. So Apple is traded under the symbol APPL. So that's what you would see, and that's what you would use for trading. So what's opening here? Opening is at the beginning of the day, what was the price per share? So for instance, in Apple, it was $113.84 when it opened that day. Close, what is high, what is the high it traded for that day? So the highest it traded for that day was $115.01 per share. Again, it always goes to the highest bidder. So the highest someone offered for the stock was $115.01. The lowest someone offered for the stock was $113.61. And then at the close, what happened at the last sell of the day? The last sell of the day was for $115.01. So if you compare that open to that close right there, that open to the close, it looks like it started at 113.84, finished at 115.01. So that gives us our net change, which is a positive number here of $1.73. So because it's positive, that means it was an increase. So then what they do is they do the percentage change. They look at the price per share and divide it by the change, and that gives them the percentage change. So it increased by 1.51% of its value. Volume is how many shares were bought or sold that day. So it seems to me like there was nearly 41,654,100 shares sold that day alone of that stock. So we're talking about a ridiculous high number of shares per company. So what is the highest the stock has been in the last year? For Apple, it was $134.54. That's the highest it traded in the last year. This isn't like a calendar year. This is 50 in the past 52 weeks. And then the next one to it is what's the low? What's the lowest it traded to? So that would be $92 this year. That dividend, that's that amount that they're paying you. So for each share that you own, you get $2.08. That's the dividend. And then that yield is what we just looked at. That's the dividend yield. So that represents that $2.08 dividend represents currently a 2.14% yield. So that's a percentage rate right there. The PE here, something that we won't use, but just to show you, here's the PE. This is the price to earnings ratio. It's the purchase price per share divided by the earnings per share. And then you have the last one, the year-to-date percentage change. How has my stock been doing? Well, the year-to-date, now this is calendar year. This isn't the last 52 weeks. This is for the calendar. You see a positive number here. That means Apple has increased value by 8.48% for the year. Again, this isn't the dividend. This is the value of the stock. So dividends are on top of year-to-date changes. You will notice some of these year-to-date changes are negative. That means in the last year, they've actually decreased in value of the stock. So if you had your money in that stock, you would have actually lost money. So you got to be really careful with your investments. So that's what it is. The open is what it started. High and low is the highest and lowest of the day. Close is what it stopped at. Percentage or net change is the actual dollar amount. Percentage change would be the percentage based on the price per share. Volume is how many shares. 52-week high and low is what's happened in the last year. The dividends, what is that company paying? And the yield, again, is a percentage rate. And that's how you read a stock table. You're going to use this information for questions on the next page.